Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot, and we'll be talking about an income stock. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. The marine shipping industry is experiencing a bit of resurgence with shipping prices on the rise, and dry bulk carriers like today's ultra high income stock Genco Shipping and Trading Limited are poised to benefit. John?
Yeah, thanks, Mo. According to one report, the dry bulk market was worth $4.1 billion in 2022. But going forward, between 2023 and 2030, dry bulk shipping is expected to expand at a compound annual growth rate of 4%, growing from 4.2 billion to 5.3 billion. The biggest growth is expected to come from increased transportation of coal and steel, as well as seaborne trade.
That's just the kind of news Genco Shipping and Trading Limited investors want to hear, right?
Well, absolutely. Genco Shipping and Trading Limited is the largest U.S. headquartered dry bulk shipping company. The New York City-based company uses its fleet of 44 modern vessels to transport both major bulk, which includes iron ore and coal, and minor bulk, which includes grains, cement, and fertilizer, across every key worldwide shipping route. Two-pronged approach to fleet compositions combines the upside potential of larger Cape-size vessels, which are focused on major bulk cargo, with the more stable earning stream of minor bulk vessels. Further enhance its operations, the company announced a new comprehensive value strategy in April of 2021. The strategy is centered on low financial leverage and three key tenets, and they are attractive quarterly dividends, further debt reduction, and growing its fleet. To that end, in the first quarter of 2023, Genco declared a dividend of 15 cents per share. That represents the 15th consecutive quarterly payout, paid down 8.7 million of debt on a voluntary basis, reducing its debt to 162.3 million. What's important to know is that since the start of 2021, Genco's actually paid down 287 million in debt and reduced its debt load by 64%. It also has an industry low cash flow break-even rate and strong liquidity position of 260.4 million. It also recently acquired two fuel-efficient Ultramax vessels and completed fuel efficiency upgrades on 7 vessels.
And how did it do in the most recent quarter?
Pretty decent, actually, with a solid outlook for the remainder of the year. For the first quarter, ended March 31st, Genco reported net income of 2.6 million or 6 cents per share. That's down from 41.7 million or 97 cents per share in the same period last year. The company's revenue slipped to 94.4 million compared to 136.2 million in the 3 months ended March 31st, 2022. The decline was primarily due to lower rates earned by major and minor bulk vessels. The average daily time charter rate, or TCE, for the company's fleet was 13,947 per day, and that's down from $24,093 per day for the 3 months ended March 31st, 2022. It's important to keep in mind that in the first quarter of 2023, a spot freight rate softened due to various seasonal factors, including the timing of the Chinese New Year, the timing of front-loaded new build deliveries, as well as a decline in cargo volumes due to maintenance and poor weather conditions in certain export regions around the world. Toward the end of the first quarter of 2023, though, the freight market began to strengthen, driven by the subsiding of a portion of these factors, as well as China's continued economic reopening. As a result, in the second quarter, management expects TCE rates to actually increase by 20% sequentially to $16,679 per day.
Earlier mentioned that they have declared 15 consecutive quarterly dividends. Could you elaborate a little bit on it, please?
Yeah, for sure. Yeah, in the first quarter of 2023, Genco declared a dividend of 15 cents per share or $1.93 on an annual basis for the current yield of 13.81%. To put that into context, the U.S. inflation rate is just 4.0%. So you're looking at a 200% increase over the U.S. inflation rate. While that's a frothy dividend by any standards, some investors were pretty disappointed with the payout. The 15% distribution comes on the heels of 5 quarters of dividend payouts ranging from 50 cents to 79 cents per share. But there's a good reason for the discrepancy. Because the company's due dividend policy, which is comprised of operating cash flow minus capital expenditures and other things, the payout will fluctuate. And that's better than a company that pays a high dividend yield that it actually can't afford. Keep in mind, the company said that first quarter earnings were hampered by various seasonal factors, but freight markets have strengthened since then. As a result, the payout should rise over the coming quarters. The company's year-to-date distribution stands at 65 cents per share, but could, some Wall Street analysts predict, rise to as high as $1.22 per share for the full year.
And I was also reading that Genco share prices could double.
Yeah. Even conservative Wall Street is bullish on Genco. The Chinese economy is reopening once again, but it's still struggling with COVID. And the near-term volatility is actually good for Genco shipping and trading stock. If you take a look at Genco's stock chart, you can see the pandemic was a boom for the global shipping industry, with supply chain issues lengthening shipping times, just as demand for goods spiked. This sent rates soaring, with marine shipping stocks reporting record profit and cash flow. Companies had to decide what to do with all that money: invest in new ships, pay down debt, or increase dividends and buybacks. Genco did the wise thing, I think. It cleaned up its balance sheet. As we already noted, since the start of 2021, Genco has paid down $287 million, or 64% of its debt. It also launched a new dividend policy, one that is tied to quarterly cash flow.
And yet, despite strong balance sheet, new dividend policy, and lowest cash flow break-even rate among U.S. listed, dry shippers, Genco stock hasn't performed as well as many would have liked.
No, you're right. Genco shipping and trading stock is up 3% over the last month, but it's down 4% year to date and is off 9.5% year over year. Not great, but in context, far better than what's going on with the breakwater dry bulk shipping ETF, which is down 45% year to date and 68% year over year. But the outlook for Genco stock remains pretty solid, with rising shipping rates juicing its bottom line. Of those, Wall Street analysts providing a 12-month share price forecast for GNK stock. The low price range is $18 per share, with a median target of $24 per share and a high estimate of $28 per share.
John, thank you so much for providing insights on Genco Shipping and Trading Limited, traded on New York Stock Exchange under symbol GNK. Genco Shipping and Trading Limited is a great marine shipping stock with diversified fleet, a strong cash flow position, and reliable high-yield dividend, low debt level, and lowest cash flow break-even rate among U.S. listed marine dry bulk shippers. The long-term outlook for Genco remains robust, with shipping rates on the rise and relatively few new dry bulk vessels on order. This should help the company deliver its value strategy that is focused on dividends, deleveraging, and growth. Folks, that's it for today. We'll be back with another income stock soon, so stay tuned. If you want to read more about John's ideas, you could head directly to www.incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.